Joining us now is Jonathan Barrett, our regular commentator on commodity issues. Jonathan, welcome to Business Today. Free fall in Europe overnight. What are your thoughts about what happened more broadly? Because it seems to have been about the banking sector, about this ongoing debt crisis.
Yeah, but it is about what's happening, but there are more things behind it. At the moment, we're tuned into the 7th of September, where the High Court of Germany will rule as to whether or not the current government could have used the Germans' hard-earned cash to actually bail out Greece and other troubled countries. So I think there's a lot more in it at the moment than just the sovereign debt, because from this one vote we could probably see a lot more evolve down the track, and it might even affect the Basel Accord.
So that domino effect could be incredibly serious. And of course, beyond just Europe, what about demand elsewhere for commodities, for example?
Well, I mean, when you look at it, it is, as you said, it's a domino effect. It's all about confidence too, because once you get a bit of a shaking confidence, particularly in Europe, we've already seen it in America as well, that people just don't put their hands in their pockets. They don't put their hands in their pockets, they're not going to spend, and all of a sudden demand for commodities start to come off, and people think we're moving into a recession. So at the moment, there's a lot of news out there that has to rebuild this confidence, and I think that's what you said, or what you saw with Obama out last night.
Trying to do just that.
Trying to do that.
Now, gold, we saw it peak again over 1,900. How high do you think it's going to go in this current spike? Well,
look, it's just been extraordinary, the move. 1,900, 1,700, and within the space of a week, we're 200 points, $200 higher. We didn't even get a chance to get back on, and we're perennial bulls for the commodity. So at the moment, I think the market will see. They really want to see what's happening in Europe. They want to see what Obama and Ben Bernanke have to say on Thursday. So if the news is worthy, then you'll probably see gold break through that 1920 and head for that goal that everyone's been clamouring on for a long time, which is 2,000.
Now, you talk about Obama and Bernanke. They're regrouping after those terrible unemployment figures that came out on Friday. And you've got this versus the hurricane season, which is really hitting oil and its production. What's happening there with regard to oil production?
Well, you hit the nail on the head. I mean, it's hurricane versus economic performance. If, in fact, we get hurricanes, that will affect production, particularly in the Gulf of Mexico. That should see, obviously, a restriction of supply onto the market, which should help support the price of crude. But we're not seeing that. The market is clearly focused. We had about a 2.5% to 3% drop in the price last night, and the market's just focused on economic recovery and the lack of it, and the concerns about how these economies will start to move. So it's actually not a bad thing, because if you think oil going down is actually going to help the recovery.
It's not bad. So can you give us a figure? Would you be prepared to give a tip?
Oh, absolutely, no problems at all. Silver is oil's in a range. We probably expect it to trade back to US $80 a barrel.
80.
And that's not a bad area for it. Below US 80, it's cheap. At the moment, above US 85, we think is expensive.
Okay. What about other commodities such as copper?
Copper, I think, is interesting at the moment, because we've just seen a lot of changes. Or in fact, we've seen the bank reserve ratio in China lift to 21.5%. That's an unprecedented move. China is the number one consumer of copper, and this move will take out $140 billion worth of funds into the market. Copper is a market that primarily works on letters of credits. So if you take that out, that demand won't be there. So we actually feel that copper, although it's in a tight range and we do have a restriction on supply, we feel that if it can hold above this 395 area, then it looks okay. But if it takes out 395, that's basis the COMEX price, we could probably see copper going a fair way lower.
Now, let's go to China for a moment, the biggest guzzler of commodities in recent times. There was talk that, in fact, they are re-gearing up to start buying physical assets themselves. They've got disillusioned with the debt that they've bought from the US. What are your thoughts about whether this is really happening?
Yeah, what I think at the moment is they went through this destocking. We could see it, and now that they've used a lot of their resources, they're starting to think whether or not they'll come back to the market. We have seen early indications that the buyers are there, but I think the interesting thing about the buying of commodities at the moment, because they see what's happening in the rest of the world, they're not aggressive about it at this stage. And it's the right thing, because we do have major inflationary issues in China. So rather than chase the price, what we're seeing is a lot of the buyers are actually holding back. So they're waiting, and it's a prudent thing if you're a buyer. Wait for the market to come to you rather than chase it. And I think that's their stance at the moment.
And is it indicating just how dominant their position is in the market?
Oh, it is. Particularly when it comes to a lot of these. I mean, if you just think their position is so strong, they just signed a record soybean deal for, so it was $5.7 billion with China to ensure that China gets soybeans. That's the largest agricultural deal ever done. So they are concerned, and they are the number one player.
But the problem is for countries who are giving up some of their biggest assets, they don't want to see them go for next to nothing.
Well, this is one of the hard things. You look at it, and not only that, but a lot of people are actually selling their sovereign wealth as well.
Absolutely.
To it. And that to me is a big issue which we'll have to deal with. But you've got such a large population out there that needs to be fed. They've got to do something, otherwise they've got major concerns down the track anyway.
To reassure their own stability. Okay, the RBA meeting later today. What are your expectations?
No change, but what I'm going to be interested in, I want to check out the rhetoric again, because two-speed economy I think is a major concern, and I actually want to see whether or not they change the way, whether they'll say, well, if things in Europe and America are looking that way, we might actually move to reduce interest rates. So I think we'll see a neutral stance, but I'm just looking for signs that they'll look and say, well, OK, we're going to reduce interest rates rather than keep a neutral stance. And that's what I think is needed at the moment.
And particularly with this sort of fresh indication that maybe jobs in some sectors are really on the decline.
Oh, absolutely. Just have a look at the retail sector. I mean, it's not good at all.
It's in crisis, yes.
Yeah, it is. So I think the RBA will look at that, and I think that everyone wants, just if we can lead into Christmas or something, have an early Christmas present and perhaps have a cut in interest rates.
We'll all be happy. Jonathan Barrett, great to see you as always. Thanks for coming in.